Okay, folks, welcome to Market Trends. I am David Russell, Global Head of Market Strategy at TradeStation. Happy New Year. Great to be back with everyone. I am just going to put up my disclosures. You also make sure everything is going smoothly here, making sure all this is appearing correctly on YouTube before I start talking. And it looks like, all right, everything is working good. Very good. All right, folks, welcome. So I'm going to show you these quick disclosures. Now, you want to go to tradestation.com, and then up at the top of the main page for TradeStation, there is a link to Market Insights right here. Insights, and you go to that. I'm going to show you these disclosures for a little bit longer. I'm also going to provide some important information in the chat. And you guys can see that. Sorry, just want to. There we go. All right. Great to see everyone. Have lots of interesting things to talk about today. The S&P 500 refusing to heed the bears, holding some very interesting levels. There's some interesting things with Fibonacci I'm going to talk about. So we there have put some disclosures into the chat. It's great to be with everyone. When you guys just confirm you can hear me? Good. Video and audio, good. Thank you guys for confirming that with me. All right, everything's coming through okay. Those are the slides, and there we go. All right. Let's get to the good stuff. All right, here we go. This is the rundown of today's webinar. So as you guys probably know, we always have a blog post that goes along with our Market Trends webinar. It's right here on Market Insights blog. If you go to it, it's going to include key things that we're going to be talking about today. And there are some interesting ones. A lot more interesting things kind of came up in the meantime since we wrote this article last night. I want to really just start off technically. Well, actually, the very first thing I want to do is I want to remind everyone that you can download a series of workspaces for the award-winning TradeStation platform. And when you have those workspaces, you can then use a lot of the tools that I'm showing you now. First, it's important to remember that they have custom indicators in the zip file. You want to load those ELD files into your TradeStation platform, accept the indicators, and then the different workspaces will function correctly. And so there's a zip file here, and all the information you need is included in that zip file. Now, if you do that, you can go to MtMain. I'm going to do this quickly. I'm going to start letting this load in the background as we're talking. I'm going to go to my earnings dates, and I'm going to bring in the entire S&P 500 by going data, S&P 500. I'm on the MtMain November 2023 workspace. That is the most recent version of our MtMain workspace that we kind of work off of. It's the main thing we use here on the Market Trends webinar. It allows us to do a lot of things looking at the overall market and individual stocks. I'm also going to load now. The S&P has changed a little bit. We're going to bring in S&P 500 here. The membership changes, so I like to leave this blank and then reload it each webinar because things come and go. And just remember, sometimes when you're working on workspaces like this, that the index changes. If you save the workspace, it's going to keep the old version of the index. I would also just mention, if you're going to be setting things like price alerts and things like that, it's often better to do that in a separate version of Radar Screen, so that then, I have certain versions of Radar Screen that I change and delete, and other ones that I keep the same if I want to set price alerts and things like that, or if I want to keep specific lists of stocks. Anyway, I wanted to just show you that's what I'm doing. It's running in the background, but now let's take a look at the S&P, because this is what I really want to look at here. All right, now, if you look in the blog post, you can see that we actually, in the blog post, have this kind of chart here. And so, there's a few things that are interesting about this. I have stochastics on that chart, which is interesting. Stochastics on that chart, slow stochastics went to an oversold condition despite the market barely dropping, and it's pretty interesting. But there's a few things here that really matter to me. First, a lot of people probably thought we were going to retest those July highs. And I can tell you that when you see something like this, it's kind of interesting because we had this ugly bearish outside candle back here, bearish outside day on the 20th of December. And then if you look at that low, we came down, tried to break it. We had an inverse hammer, pretty much two inverse hammers, and then rebound. So we held that low. Now it's pretty interesting when you hold a tight low like that, because this was only like 10 days, 11 days apart. So we held a recent low, and that is a sign that there's not a lot of selling pressure. We didn't even, nothing even really came up to suggest that I'm sorry, this is the July high. We didn't do anything to even suggest that was going to be tested. What's interesting is back in July, we had this bearish outside day. It was a painful reversal pattern, got confirmed, followed by months of downside. Here we have a bearish outside day. Looks very similar, but then what do we get? We get no confirmation of it as a bearish signal. If anything, it simply becomes new support. So this is something that, in my view, is something of a sign here that this market has, at this point, some buyers underneath it, and not a lot of sellers really looking to hit it, from the upside. I mean, today we had a hot CPI report, and it just not that big of a deal for people. And I'm going to get into why in a minute. But I want to just mention, technically, to me, this is very interesting to see us holding this tight level. Now, I also want to mention, if you go over here to the blog post and you go to the recent ideas we did on TradingView, we actually did this analysis of the S&P. We make a lot of similar points in these because these articles are more or less yesterday, both of them. What's interesting to me is this is the S&P 500. We ran this yesterday, 10 days apart. Now, we were drawing some comparisons to 1995. And it's pretty interesting. If you look at that time, there were a lot of similarities. So I encourage you to check out that article, so you think about it. But the main thing I think is important here is when you start to see RSI kind of cooking to the upside, it often can keep cooking for a while. And a market can get overbought and stay overbought for months and months and months. And it's interesting because take a look back at 1995. And what do we see in 19? We're here. All right, look back here at 1995. Sorry. That would be almost at the beginning of the chart. Anyway, here's our breakout in 1995. This is when the market broke out. You will notice that RSI stayed overbought. And we did not pull back to the 50-day moving average, I think, for the entirety of 1995. Or maybe you took here, kind of got near it in the summer. I mean, once this thing started moving, it's pretty interesting. Now I'm going to show you something else that's kind of interesting. I'm going to get to CPI, but let's take a look at this. This is historical CPI. Look in 1995. What's interesting is CPI continued to rise here, after. So it's kind of interesting that the market had already kind of anticipated this eventual decline of inflation. So I just think it's important to kind of realize here that, this is in a downward trajectory. It's not going to be a straight line for various reasons. But at this point, the market has kind of made up its mind about things. And now it's not to say that it's going to, remain the case if we continue to get negative, things, if we start getting more signs of inflationary problems or things like that. However, I think it's also just important to realize we held a tight pullback of only 2 weeks ago. We basically have been seeing RSI hit overbought, and we have not pulled back significantly. And it's also important that we're holding that 21-day exponential moving average here, which is exactly what happened also in 1995. Now, let's look on this. I have this set for 2-hour bars, 120 minutes. This is the S&P, is an intraday chart. Let's bring this up on a full screen. But I want to point out something else here. It's kind of interesting. Here is a level. It goes back to the high of December 14th. It's pretty much, what is this level? It's around 47.38. Look, it was this low on the 22nd, and now we're holding it. Interesting. You see these levels, and it's like, huh. It's just kind of interesting. All right, next thing, let's go to drawings. Let's go to Fibonacci price retracement lines. This was the Friday close. This was a Friday right here. So I'm going to draw from this line up to the high. And what do we see? 50% retracement is right there. Interesting. We held the 50% retracement. Now, let's look at the low. Let's actually just move this over. let's go to the high of today, and now let's go to the low. This is a little bit different because this is a much shorter time frame. So I'm not using the weekly, but it is still interesting that if you look at the move off of the low on the 5th through the high today, it's a 50% retracement. So one of the things that's interesting to me, now I'm going to go to like a daily chart on this. When the market wants to trend higher, 50% retracements hold. When it doesn't want to, they start breaking. So I'm not going to take the time right now to do this, but at other times I've shown how these rallies coming out last spring held 50% retracements. Like from here to here, I think was at 50%. We had, this breakout after the debt ceiling, that was a 50%. But then, boom, we fail to hold it and we go into a period of downside. And now we have that move and we hold the 50%. We have another move, we hold the 50%. So when you see the 50% holding, it's a really simple way to do things. But when the 50% holds, it confirms the direction. And in this case, the direction is higher. So I think it's just interesting to realize that at this point in time, the all-time high on the S&P is at 48.18, which is like, I guess, about 1% away. So, I mean, we are right now squeezing into a level near the highs. And I think when you think about it, if the Bears had a shot, that this was their best shot. The events coming up are not as important. And then after this, we get into earnings. This is a tight range here between more or less this low. I would say really the December 20 low and this low here on January 5th, up to 48.18. We're talking about really a range of about 140 points on the S&P. It's a pretty tight range near highs with all the shorter term moving averages. All of them are lined up now in a bullish configuration. These are the longer term. The 50-day is now above the 100-day. So at this moment in time, there's nothing that's really doing a whole lot to confirm or to undermine the apparently bullish patterns we're seeing here. I think it's important to realize that this rally is hated. This is a wall of worry. People are worried about the Red Sea shipping. People are worried about whatever they're worried about. And the fact is that there's just a lot of money on the sidelines. And when you look out into the future, at this point, there's a reason to believe that things are getting better. It's not to say they will, but the Fed has signaled a more bullish position right now. And on top of that, there are reasons to look at the data and be a little bit more optimistic. So let me just go through. These are some of the articles and things I want to just kind of just quickly share and just work through. Let me just make sure. I'm going to close this one. All right, so let's actually now look at the CPI because, it was a little bit hotter than expected. But if you look at the areas that were hot or, higher than expected, the shelter was here. But, almost every market trend or market analysis you look at, if you talk to realtors, you look at rent.com, a lot of those things is that, there is a downward pressure in housing costs and rents at this time. And I think it's also important to realize is that there is a lot of anecdotal evidence that house prices are still too high in terms of what the market will support. So what does that really mean? You have a relatively liquid market without a lot of people transacting homes. So then what happens all of a sudden when what happens all of a sudden when I'm trapped, I want to move and I want to buy another house, but I need to sell my old house. What do? I need to sell. I'm going to start cutting prices. And so what happens is as the market thaws, we're probably going to see the listing, the value of houses go down. And this is something that most people are still looking at 2021 and saying, wow, my house is worth X amount. Your house went from 400,000 to like 700,000 and you're still clinging to that 700, but maybe you've got to take it down to like 600 or 585. And those people are not doing it yet. But then when they find that other house they want and they need to sell, then suddenly they're going to start cutting prices. Now, this is based on anecdotal things that I've read from realtors. And so I think it's important to just kind of realize that is a potential that's out there. We have significant supply of new homes, of apartments that have come online. This is what we've been talking about for months. It comes from S&P. They're looking at the commercial real estate market. They've been talking about this. So, if you are looking out and you want to be optimistic, as most stock investors fundamentally are essentially, it's not enormously difficult to believe that this number is too high. I mean, you can make a case for saying this number is going to come down, and or there's reasons to believe it will come down. Now, if things remain like this and they don't improve for 2, 3, 4 months, now suddenly that optimism might fade. But the market will stick with the belief for a while until that belief fails to pan out. And at this point in time, we don't have enough evidence that it's going to the rate cutting narrative is going to go away. It's a new narrative, as we talked a lot when we were on this webinar back here coming off this low. We highlighted all these things a lot. If you go back and watch the old webinars about the Q3 productivity report and a lot of these other things were very positive in terms of people looking for inflation to come down. I'm going to look at some other things that come from the Institute for Supply Management. They paint a similar picture. So I think it's important to realize right now that things are not a straight line. There's always doubts along the way, but a lot of the evidence right now, or at least there's still reason for people to remain optimistic for now, and that's what the market is operating with for now. And I think it's important also to realize is that if these, ultimately, if the fears don't pan out, that pullback to the 21-day exponential moving average, people are going to see that and they're just going to be like, this market is in a pretty strong short-term uptrend. They're going to see 1995. We went all year, like I said, without going to the 50-day moving average. So maybe that's all we get in this market. Maybe RSI just goes overbought and stays overbought, and we just have to live with it. And I think that's one of the things now that the market is starting to kind of see, and it's kind of panning out. So anyway, this was the thing in the inflation report. There's also weird things like electricity prices going up. I mean, honestly, I have no idea how to even things like electricity are so random. You get one state like raises rates or something. And I mean, this is not really what is concerning. I think when you look at it overall, things like vehicle prices are not shooting up. The food prices are really pretty much moderating and under control. And then one of the other big gains came from insurance, which I mean, auto insurance, that has a lagging effect. So a lot of these things, I think you look at this, it's just not necessarily as bad as it looks. At least the market can believe that for now. So I think it's important just to realize that we had inflation go from 8% to under 4% in I don't know, less than 8, around 18 months. And like I said, the thing about those auto rates, those insurance rates, those update a year or two later. So those are the sort of things that will have that kind of lagging effect for a while. And I think it's important to realize that's the way inflation works. And I would argue that a lot of this downward pressure we saw in inflation here, these were all lagging effects from the financial crisis, a lot of this low inflation. So the thing is that this stuff will trickle through over time. And the market at this point in time is a little bit more willing to be optimistic and to believe. And I think one of the big reasons is Michelle Bowman. Here's a hawk and she turns dovish. Here we have, all right, this was back on Monday. Michelle Bowman basically says, in my view, we are not, she basically said we're not ready to start cutting, but she basically said that, she went from being very hawkish to being, in the middle of the road, or, she's turning. Then we have this comment here from Mr. Bostic. He's back. He's a voter again. He was off. Now he's back. He says, we're on the path to 2%. Inflation's falling faster than we expected. So in my kind of experience looking at the market, looking at trends, when things surprise in a certain direction, that's really what matters. Because when things consistently surprise in a hot direction of inflation, like it was in late 2021 or early 2022, that's bad. And when they surprise the other way, so when you have people saying it's faster than I expected, that is telling you that the trend is moving in the direction you want to be. So I think it's important to kind of see these comments from, Raphael Bostic and from Michelle Bowman. It also means that the market might be able to be like, what, if we don't get a rate cut in March or in March, oh, well, just kind of keep moving forward. And I mean, and it's kind of interesting because then when that, if it does pan out, it just means that there's going to be nothing to really, go wrong. It's one of these things when the market will continue to look for those things. I'm not going to say nothing can go wrong, but the thing is that the market right now can run on just optimism and the fact there's a lot of cash on the sidelines. There will be a point when it could get overextended. But the point is that in the meantime, it will be, trust the trend, buy now, ask questions later. And then, like I said, it could run. If it does break out to new highs, you could see some chasing to the upside. And then in a month or two, that's when people start to say, or 3 months, they say, wow, it's overextended. And I just think it's important to realize that's often the way the market actually functions. Now, another thing that's interesting, Institute for Supply Management. I just like these guys. You can Google ISM supply management, whatever. You can look at this as manufacturing and the services. And I just grabbed some things over here interesting. In the manufacturing, we saw basically this guy said that they basically said here that it was more accommodative. All right, he said inventory becoming more accommodative for future production. And what's also interesting here, if you look at prices, right? Prices were at a 45. So this is like not inflationary. Now, if you go back to 3 years ago, this was hot. This was showing big price gains. This led inflation. The ISM manufacturing. Also services, ISM services. This number came out. When was this? This was a couple of days. This was like 2 weeks ago, or the end of December. This was recent. I mean, this was a December number that came out, I think, last week. But what's really interesting is we saw the fastest deliveries since June of 2009, basically the rock bottom of the financial crisis. So I don't know if anyone has tried to do anything recently. I recently got a new furnace, and they were there like the next day. I tried to get, I had to have some work done on my house. And like I had 4 guys showing up at my house wanting to get stuff done. So it's kind of interesting that services show quick turnaround time. What does that mean? It means there's slack in the system. The other thing that's interesting here is the employment was the weakest since July of 2020. And this is also, I don't have it. There was something here of the employment here being a weak number. So overall, what are we seeing? These things, they give a reason to be viewing the price pressure as being positive. So I'm going to get to some other things here that some specific, potential options, opportunity, concepts or ideas maybe for earnings season coming up in a minute, but just also job cuts. Here is one today. Google cuts hundreds of jobs. We had a series of other things like this here. We saw job cuts Google just happened today, but Amazon cut jobs. It's also interesting that S&P Global put out a note recently saying that fewer temp jobs reflect a weak labor market. It's kind of interesting. Declines in temporary employment signal possible trouble for the economy. Today's claims were not showing that. But again, the key thing is we're getting some data. Before, it was like everything was flashing red hot a year and a half ago, 2 years ago. Or 2 years ago, I should say. It was all flashing red hot. It was like jolts were through the roof, job openings through the roof, wages through the roof, ISM through the roof. Everything was just incredibly hot. And now it's much more mixed. And we didn't have things like this, from people. This is an interesting article. This is actually an interesting thing. This blog on S&P Market Intelligence, sometimes they have some interesting sort of trend things about the economy. And this was one of them. But again, they're saying it. And then we see these different things, that the job cuts at Google. We see the job cuts at Amazon. Amazon was at Twitch and Prime Videos. Unity Software completely slashed their workforce. So these things also point in that direction. Interesting little article. I thought it was just more of kind of a fun oddity, but apparently this was kind of interesting. If you look at, where's this article? Walmart to bring drone delivery using, I just thought this was kind of interesting because things like this are going to start becoming just kind of going forward. This is going to become more interesting. I just took this more as like an interesting trend piece, but I think this is kind of interesting that, you're 2 major companies that are obviously starting to use something like this. They are starting it at this spot in Texas, but this could be something where, we go into the future and, if you remember what it was like to not have drones, delivering your groceries, then you know what, in like 10 years, there I'm 48. There's people who don't remember old fashioned telephones. Well, you know what? you're going to be in that club where you don't remember what it was like to go and get your own groceries, where drones were not a normal thing to have flying around in your neighborhood. I just thought this was kind of interesting, so I wanted to mention it. All right, let me just. But we're going to get these interesting sort of innovations trickling through from AI and from things like drones. Um, these were all. Let me just kind of close these as I go. So there's a lot of things I wanted to mention here. This is one that popped up today. I'd actually been kind of watching this, and this one jumped ahead of me. But Microsoft overtakes Apple as the world's most valuable company. And I think this is actually going to be more of a trend here. If you look at a lot of things right now, Microsoft, the chart is stronger on Microsoft. If we look at the Microsoft chart here, let's take a look at. I mean, here we have hitting an all-time high today. This thing didn't even go under its 50-day moving average. So this is pretty interesting. Apple here is oversold, but it's just kind of languishing. And, this false breakout is really not a wonderful thing to see. And I think the other problem with Apple is that, we all know that they have this headset coming and everything like that. But, is that thing a $2,400 kind of, toy, which is how it's going to start? I mean, no offense. It's not going to be an iPhone in terms of volume. I mean, is that going to really move the needle? Probably not. So I think Apple has trouble now with their iPhone globally and stuff like that. And so I think Apple now is still in a spot here where it's at risk of just languishing around. They're going to do some AI stuff along the way. But I think the idea of Microsoft overtaking Apple could be an interesting theme in 2024. And I mean, the Microsoft chart looks here pretty, when you look at it, I mean, there's nothing here that shows any kind of, look at how it's holding above these levels. We did a chart study on this at the end of last year. It pulled back a little more than I expected, but, everything here, I think, kind of continues to confirm that people are viewing this as like a big sort of name. And it's kind of interesting, in the 1990s, Apple was dead. It's funny. And then it came to life after the tech bubble ended. And, for the last 15 years, Apple has more or less outperformed Microsoft. It'd be interesting if maybe that goes back, and maybe going forward, we actually have this idea of Microsoft being the dominant of the two. All right, let's see. This was from Fannie Mae, but I thought it was interesting that, there is a lot of optimism about, mortgage rates and the housing market and stuff like that. We talked a lot about housing. We were really flagging back when the home builder ETF, I think it's HGX on the TradeStation platform, when it broke out to new highs, the Philadelphia Home Builder Index. These guys actually have some data coming out soon we're going to mention. But I think at this point, it's interesting just to bear in mind that this industry has broken out to new all-time highs. And, when things break out to new highs, they do. And it just shows that there's money flowing into it. And I think, people who follow trends in a bull market are going to pay attention to the fact that this is broken out to new highs and is, apparently running, and there's fundamental reasons behind it. So I'm not sure exactly at this moment in time, what to make of the home builders with the data coming up soon. We have housing starts and building permits coming soon. If you look in the blog, it's down at the bottom on upcoming events. I don't have the exact date in front of me, but, that's actually out there as well. So, it might need to kind of pull back and then, have that data come through. Also, with the kind of with the economic data a little bit stronger, the inflation and stuff, it might take a little bit of sort of momentum away from this. But I did want to just emphasize that we do continue to have, kind of brewing in the background, this sort of potentially positive situation for the home builders. It's also interesting to see the semiconductors basically are forecasting a double-digit growth this year. And I just think it's interesting because there's been a lot of negative news about semiconductors. Samsung had bad news. You had the autos had some bad news with Mobileye came out, and this is the idea of there being problems, too much, not enough demand in the auto space for semiconductors. But then, when you look at the real names, the NVIDIAs, the AMDs and stuff like that, they don't seem to have that problem. And the AI build out is just something that I think is it just remains an issue, and it's a driver. So it's interesting to see that even with everything that sounded so bad about semiconductors early this year, then you go and you look at this report from the Semiconductor Industry Association, and what do they say? They basically see they're going to see double-digit growth in 2024. If you go to semiconductors.org and you go to news, this is where Seeking Alpha took this information. So this is something you guys might want to check out. It's kind of interesting. I should just mention that Intel had a very strong move here, kind of starting the year. It's something of a turnaround play. This is one I think that's kind of interesting to watch. Earnings are on the 25th. So this will be interesting to see how this name plays out. Right here, this is kind of squeezing it. You can see there's a little bit of a falling line here. I would almost think that, you might see more of a test down to that 50-day, back down kind of toward 43, 44, or even just down the Keltner channel a little bit, because you have time until that. But I think Intel is maybe a name that is going to get a lot of attention this year, because they seem to have the ingredients of a turnaround in place. So I think that's one to also keep on our radar. All right. There's an interesting article about how Meta had multiple drivers, and it was kind of interesting. They were talking about things like operating expenses and also the potential for just increased advertising. So I think that's just another one. It just kind of shows that the large cap growth names, they're extended, they've run a lot, but the thing is that they're not necessarily done with the business improvement that they really started a year ago. So this was, I think, pretty interesting when you look at that strong move in Meta yesterday. It just kind of shows that people want to think, oh, it's done going up, and then it's just completely people come through and find more bullish things in it. So I think it's interesting also. Look at this here. What do we have? We hold the 21 exponential. So, it's kind of interesting. We're seeing a lot of things holding the 21-day exponential. So I think that's also a trend we want to just be watching. I'm going to show you guys how to find right now. As you probably know, with our workspace here, we can immediately find all the S&P companies right now doing that very thing today. And we're going to get to that in a minute. All right. Let me just, as you mentioned, these are some of the various bearish things in Apple. We saw a series of different things. This one was, negativity from KeyBank. There's been a lot of people downgrades here. Redburn, I never heard of them, but there were a series of, Redburn. There were some other things here of Apple recently, Barclays, Piper Sandler. So I think those are just kind of, those are also kind of fitting into the narrative I wanted to mention about Microsoft versus Apple. I think that could be, a narrative for this year. Wells Fargo raised their price target on the S&P, looking for rate cuts. Just wanted to mention that. There's a thing yesterday for Palantir, but I want to say that I think, this is a classic example, I think, of like being wary of buying news. There was an article that Palantir was getting new business from, with Israeli government or something. I think that the issue, though, is that ultimately, when the news goes against the chart, don't trust it. And I think that right now you have a stock where the 8 days under the 21-day, it's under the 50-day, it's under the 100-day, unlike most other big names. And then you get a bullish news story and it doesn't stick. So I think it's important to realize that, I don't know how big Palantir is, how big of it, but you're talking, Palantir does business with the U.S. government. It's a pretty big company. Israel, I'm sure they spend a lot of money on stuff like this, but one country, one order, is it going to turn around a stock like this that's been struggling? Who knows? Now, this name had this bullish gap on earnings, and we have this falling trend line here. So there might be other potential for it. This might be one that maybe when the new week starts, we could see if it actually wants to break this trend line. But, we need to have a little bit more evidence of that. And breakouts like this need a little more confirmation. We'd want to see, for example, the prices really get above that 8-day exponential moving average. You'd want to see something happen down here with the 21-day. Would it maybe sit throughout next week and do that work that needs to be done in terms of holding along this area, maybe having that break through the 21-day exponential, and then a rally up toward the 12th, because this one is it's a month away. It's the 12th. So we kind of have some time on it. So I want to just mention that my thought was just important to realize that there's a classic case of, kind of selling the news in something. Um, and not trusting news when the chart doesn't agree with it. So it's an important thing. All right, we covered most of these things here. Last thing I thought was interesting, I did want to mention, and this is actually one of the big themes here. Right, so I'm going to jump over here. If you're on my blog post and you just go up here to Market Insights, I'm going to open up the overall blog. We did an outlook for this year, and I want to mention a couple of themes in it. Well, one of them, it wasn't actually intuitive surgical, but I think it's kind of interesting. This article here at 2024, but this was interesting. I mean, this company is historically like ISRG. This is, I mean, a major growth name. This company historically has really been a performer, for people who are, growth oriented investors. It can be a very powerful momentum stock. And, it basically hasn't gone anywhere for like 2 years or something here. So this company had some strong earnings and stuff. And I think this could be another sort of area to watch. I need to look into it, but I have seen throughout the healthcare space, like DaVita and a lot of these names, I mean, it just seems like there's money coming back to them. We basically did a trading view idea on I'm sorry, CI Cigna. And we did this idea on trading view where basically we noted the way it was holding this level here from late November. They had this is when they broke off. They were going to buy another company. I can't remember which one, but they maybe in Humana. Anyway, they gapped higher. We did an idea on this, came down, holds, and then continues. This is just kind of interesting because I think it shows that the healthcare has just been like neglected for so long. And I think it's interesting that when things have been neglected for a long time and they haven't done particularly well, it means that there's not entrenched sellers. And that can mean that pullbacks are pretty mild. And when it starts, excuse me, when it starts running, you can get something of a stampede. So I think some of the things happening in healthcare suggest that might be happening. All right. So now, one of the themes I want to get into, and Toast is not on my list, but one of the themes that I highlighted here was new growth stocks may go mainstream. Now, Toast, TOST, Goldman put out some kind of bullish note on them. I'm not always just going to go around like whatever Goldman says, so it's true. But my point is, I think that one of the trends this year that, and we started to see it late last year, is that we're seeing now that the growth trade is spreading to the mid-cap sort of names, to some of these smaller growth names. And I think that that's one of the things that we can see more of here. And this thing in Toast, I mean, it's kind of an obscure fintech, so I don't know exactly. But I think the thing is that this is an example of the trend I'm talking about. Now, the trend I was talking about was stuff like Uber added to the S&P 500, a stock like Airbnb, which I think is that, wait, ABNB. Wait, ABNB. Sorry. Well, anyway, Airbnb here. These companies were both added to the S&P 500 recently. These are that kind of next tier growth names. I mean, this is kind of interesting the way you look at how Airbnb here, it broke out. It had this, you can see it was a falling trend line. We did a trading view idea on this right here. It went shooting up, came back down and holding. But here it is now. The 50-day is holding with the 100-day. The 8 days above the 21. If you look at it, I mean, you can see here that, if you look at it with weekly closes as well, the pieces are coming together here potentially. And I think there's a name we want to watch, see if we can get back up through kind of this kind of 150 to 155 area. Earnings on this one are on the 13th. To me, this is a trend we could see this year, a widening of the growth into more of these sort of areas. We named some of these like Snowflake, Palantir, Coinbase. Pinterest was one that we talked about a lot. And I think this is interesting because, in some ways, Twitter's pain could be Pinterest gain. Same thing for Snapchat. Both of these we had talked about a lot at different times. These are those sort of like stocks that really had struggled, coming out of late 2021 when the growth names started going down. And I think that, movement into these names is another potential trend this year. Unity Software with those job cuts was interesting. There's another one I was watching. PagerDuty had this thing. So I was looking at some people talking about potential short squeezes, and this name was on the list for short squeezes. PD, this is another tech name that went public back in like 2018 or something. Interesting to see that short squeeze in it yesterday. Um, DoorDash is another one that's been on my list. Mongo database. So there's a series of these names, and we're going to revisit them in coming webinars. I want to just put them on people's list because, or just kind of mention the fact that we're seeing something of that trend right now with earnings season coming up. It might not be exactly that time, but some of these names, we were scanning for companies that had kind of gone public, kind of in that period between 2017 and 22, when there were a series of these tech IPOs. Then the whole growth sector crashed when the Fed hiked. And now a lot of them are well below their old highs. And like I said, that's some of the areas, that's one of the things that I viewed as a potential trend this calendar year. And, we were only on January 11th. So we're going to be revisiting this, and we're going to be talking about this in future webinars. But I did want to talk about this because some of it does kind of seem to be happening, especially you look at the strength in Uber. I mean, this has really been impressive to me. This kind of move like this, was really a sign of institutional rotation into this name. So I think this is an interesting name to be watching here. All right. So questions. You're asking me some questions about stuff that I don't know much about. I don't know anything about these things you're asking me right now. There's a series of people asking me something I wish I could answer, but I don't know anything about it. So we'll have to pass over that. I generally don't want to talk. I generally am not going to talk much about things that TradeStation might do aside from the features of our platform and things like that, which I'm now going to focus on a little bit more. Let's now look at. I thought it was interesting. If you just look here, actually, I don't have these articles, but everything in crude oil here. Is just, we've been talking about this and really beating like a dead horse. We don't want to overemphasize it, but, I just think that, we had a pretty big crude build, big gasoline build. So, this, and I just think that if something happens, if the Middle East situation starts to improve, I think there's potential here for, this oil could maybe break down some more here. And I think it's interesting because we talked about this in December, but there is a lot of production. These guys are just like, we talked about it, Chevron, all these guys are increasing their production this calendar year. And I think that, Brazil is also increasing production. Venezuelan sanctions on Venezuela are gone. So, right now energy here has a lot of negative stuff happening. It's interesting. There was actually the government basically forecasting more American domestic production. The Saudis cut their selling price. However, they do that. I'm not sure how exactly that works. So they have a set price that they do, and they lowered it. So it all points in that direction. That we've been talking about this since like mid-October, when despite all the unrest in the Middle East, crude could simply not get a bid. And then basically gasoline inventories up 8 million this week, or last week, or the number came out on Wednesday. All of this here is, I think kind of keeping us in a situation where you look at the XLE, for example. I'm just kind of waiting and watching, but I've been kind of saying these names like Oxy. This looks to me a lot like Solar Edge before Solar Edge like knife lower. Look at this, at 50 crosses under the 200, and it just kind of like starts breaking here. And like, I still, I think that we might want to just kind of remember that pattern, because, if things start to improve in, the geopolitical situation or something else happens with energy here, these names are potentially on thin ice. Look at the XLE. And if you look here, there is basically an uptrend in place. You can draw it. There was an uptrend that was here, kind of off along these lows. They broke that trend. If you also look at it on a more shallow basis, it's breaking, I just think, This is interesting. We have the death cross here in the XLE. So, and if this happens, I mean, I don't see how it becomes a positive for inflation usually, or it becomes a negative for inflation, but a positive for what we think about inflation. So these things are interesting here. I think they continue to work in that direction. All right. I don't have time to cover this. I'm sorry. I'm just running on time. I want to quickly mention, I always kind of look for a stock that's not in the S&P or anything like that. This one, I looked at NTRA. It's a biotech stock. I've sometimes looked at some of these, and they've been pretty interesting to see how they go. Like Pinterest was one. No, it was, we talked about Pinterest on this pullback back here, and it kind of continued higher. And I think NTRA, they raised guidance as a preliminary. They issued early results. Stock hit a multi-year high. Just kind of interesting to look at this name. All right, now upcoming events. Housing starts in. All right, so those are housing starts and building permits are on Thursday the 18th. So I think it's important to realize that that is one of those things to bear in mind for the home builders. We have the PPI tomorrow, and then we start getting into earnings. Don't forget, we have a market holiday on Monday for Martin Luther King Day. Also, these Taiwan elections, I'm not really sure. I don't like opining on geopolitical events or anything like that. Who knows exactly, but it could be something of a mover for the for global stocks, even potentially semiconductors and chips and stuff like that. But it could also be one of these things when there's a lot of fear, and then once the event passes, boom, there could be, some buying. So, all right, let's look now at stocks that are doing some interesting things. We're going to go to our MA tools. Like I said, we can see here all the S&P 500 stocks right now that are hitting their 21-day moving average. We go to our MA tools on our workspace, and we can actually see this whole list of companies here. So just kind of interesting here. I'm going to kind of diminish this, kind of make this smaller so we can see. I don't know much about Ben or whatever, these mutual fund company, but it's interesting. You can look down the list and you can start to see these names. Look at Citi here pulling back. They had some kind of losses that they reported today, but Citi has been on a monster run. It's kind of interesting here to see this pullback to the rising 21-day exponential moving average. But this is some of the stuff you can easily do with this workspace. So I'm just kind of show this to you. It's also interesting. We go to MT breadth that we start to see today more companies hitting 52-week highs. So here on our SPY work spreadsheet, chart, this down here shows companies hitting 52-week highs. So let's go over here back to our MtMain. And we can now go to our price grid. And we can see stocks hitting 52-week highs today by looking at distance from 52-week high. There's a custom indicator giving you guys. And you can see, look at Palo Alto Networks. This one's interesting. This was like languishing, and it just came exploding back. This was one I was actually looking at. I didn't do anything with it, but I was looking at it late in the year because it was under the Keltner channel. One of the indicators we've shared with you guys is a Keltner pullback, which finds when stocks are at the bottom of the Keltner channel. Is one of the methods we sometimes use is looking for stocks, for example, that have the 21-day exponential above the 50-day, but you go down near the bottom of the Keltner channel. I think we have to, let me see. I might need to update. Yeah, you know what? I'm going to update. And I'm going to do a new version of MtMain. And I'm gonna give you guys I call it Keltner pullback. So let me just show you what it is. And I'm going to add it next webinar. Go to studies. And there's a custom indicator I have. And but it's super simple. You just take the Keltner channel, and then you just show where you are inside, within it. Keltner pullbacks is added here. So this is going to show when stocks are near the bottom of the Keltner channel. Now, in this case, things are bouncing, so it's not necessarily a signal. But if you look at Boeing, for example, you can see it's at minus 89. That means that it's basically almost an entire Keltner channel away from its Keltner channel. And this is the average true range off the 20-day simple moving average. So if you look for stuff that is kind of, in this area, like AMAT today, for example, let's look at this one. AMAT. This means it's just slightly below the bottom of its Keltner channel. Look at it right there. So, I mean, these are the ways I would use this. So I'm not necessarily saying that gives us any clear signal on AMAT or anything like that. But this Keltner pullback is an indicator I want to share with you guys next week. So I'm going to make a note of that. Okay. All right, so really quickly, just to return to this, these are our earnings dates. This is a tool, a quick way that you can go through and see who's reporting earnings. You build yourself a little upcoming calendar. I have my average options volume custom indicator here on the award-winning TradeStation platform. And what you can see is this allows us to highlight the names that really trade lots of options. There's a threshold set in it. If you go into the studies and you edit it, you can then set the threshold and inputs. I have it set at 10,000 contracts. So if a stock trades at least 10,000 puts and calls per session average, then it's going to highlight it. And it allows me to kind of separate the wheat from the chaff. I mean, look at stuff like PPG Industries. I mean, no one trades options on that, but you can see the ones that do. So you can just kind of go down the list and start focusing on those active names, things like UAL or whatever. So this is the earnings dates tab on the MtMain Workspace. Okay, let me just quickly show you standardized returns, and then I'm going to fire up Option Station Pro. These are standardized returns of some of the exchange-traded funds that we're talking about. All right. Two things that grabbed my eyes coming in here. We recently did a trading view idea on it was about United Healthcare. Now, it's not usually a super, exciting name. However, United Healthcare has had a few interesting things. It's kind of interesting to look at Intuitive Surgical and just be like, wow, it's done nothing for 12 to 18 months. Gapped higher on strong earnings there, gapped higher on strong earnings here, and now we have the earnings report coming up. Now, as it's been chopping sideways for this period of time, you can basically see that it's getting near that old all-time high. So, let's look at the options chain on this. The earnings come out, as we can see here. It's set. You're going to see the earnings are coming out on the 12th, which is tomorrow morning. So basically, this is one that if it has good earnings, potentially, will we get some kind of, rally or something like that? And what I thought was kind of interesting is if you look at the weekly options expiring just tomorrow. Now, just realize that this is a binary concept. It's going to be something where it's, all or nothing, but the actual cost of a trade like this is not very high. So if a person looks here and they look at like the 5, like this one, like the 555. So this stock's all-time high is right around 558. And if a company like this is going to have, a strong number, when you have this long basing pattern, I mean, historically, if it's a good number, it could be a breakout that then just kind of extends. And you don't get any kind of pullback for a few weeks. I mean, some of the examples of this, we talked about things like Garmin. I mean, it's crazy, but this stock, when it broke out, look what it did. It broke out and it just went like straight up for weeks. So, the thing is, if it breaks, if UNH breaks out, some people might say, you know what, if it's a strong number, closing above 560 is not out of the realm of possibility, same day. So we click on the 550 calls and then we hold down the control button and click on the 560 calls, we can see here that this $5 spread costs 70 cents. So, that's something that could potentially, have a return of, I don't know, 500 or 600% or something like that. I have to do the math on it, but it's, it's an all or nothing. If it goes down, then that position is going to be worthless. Let me just do really quickly on a calculator. It's a potential 625% or something like that if it closes above 560 tomorrow afternoon following earnings tomorrow morning. So 560 above 540, we're looking at the stock moving about 4%, which, if it has a breakout in strong earnings, that might be something that happens. So I want to just kind of mention that. And to me, the thing that grabs my attention about this is just this kind of basing pattern. If it, like historically, and you look at technicals, when things escape from something like this, you can get extension. So the second one that popped up in my mind, looking here at our earnings dates, is Delta Airlines. They report tomorrow morning as well. Okay. They trade lots of options. Now, this one's been kind of interesting because it's had a bounce recently here, but you really see this has gone nowhere really now for almost a month. So it's in a range. And, if it breaks out and wants to kind of jump, a move up, above this like 44. I mean, something like this is also possible in a liquid name, a name that is pretty volatile. And, these names, and it's also the other thing to remember about it is that this stock is off of its, its 52-week high. So if it wants to jump and extend, there's space to the upside. So one thing here that might be of attention, remember, these are kind of like, you use options, or you could consider using options for something like this because of the fact that it allows very limited risk. A stock like this could just do anything. And with shares, it could just be, the risk can be very significant. With options, though, a person could buy the 44 calls, and then the spread could also sell the 18 calls. I'm going to click on 28. I'm going to hold down control. I'm going to go over here to the bid of this one to this one. So looking at a 15-cent wide spread for a $1, 15 cent debit. So if that's a potential, about 560%. So, 45, the current price at 43.2, that's a move also about 6.4% for a potential return of potentially around 600%. So, I think that this is the sort of thing that I want to just kind of emphasize, that when you have liquid names, when you leverage the ability of the TradeStation platform to identify earnings dates, identify liquid names, and to plan and look ahead, and you can use things like vertical spreads, people may find some potential to kind of position themselves in a way with limited risk. It's all about limiting risk and identifying those events that can actually kind of work. The thing is with options, when the move doesn't come, it's just boop, they just evaporate into nothingness. But when you know the events and you know the levels and you can identify the risk reward, and you think of the cost that's out there and the potential you can get for it, that's some of the ways you might think about doing it. So I want to just kind of highlight those. We're going to have a lot of these potential ones coming up because, as our earnings date shows, things are going to start getting more active down the road. I didn't have any clear ideas for the financials, so I didn't mention those. But we're going to start getting into the big names. And I'd say if you want to click here, you can just see the big names you can click on. This is the cool thing about using this approach. You can just click on and sort by average options volume or by market cap, and you're going to basically see all the big names, and this will tell you when they come up, when they report, and you can start planning. It shows that the day, how many days away. It also shows whether or not it's confirmed yet. So these are some of the tools that we have and that you can access with the TradeStation platform. We're going to be back next week. We always do these now. We just stopped over the holiday period, but we do these on Thursday afternoon at 2 p.m. Eastern. Hope you guys check them out and come back and join us again. And just remember, the S&P is just kind of holding this level. Like I said, we started off this webinar by emphasizing that the tightness of the pullback, holding this level, and the fact that those 50% retracements are working. And finally, RSI, as John Maynard Keynes said, market can remain irrational longer than you can remain solvent. If it wants to be cooking and stay in an overbought condition, there is historical precedent if you look back to another famous soft landing in 1995. So hope you guys have a great week. I'll see you next week. Don't forget, market closed on Monday. Have a great 3-day weekend.